Welcome to the HKMA podcast. I'm your host, Shusi He. Through this new channel, we will go behind the scenes with direct insights into policy, innovation, and the key initiatives of the Hong Kong Monetary Authority. And in today's debut episode, we will unpack the HKMA's latest analysis of global and local economies, as well as Hong Kong's financial landscape. Joining me is Mr. Zhu Haibin, who is the HKMA's Executive Director for Research and a seasoned economist. Thank you so much for joining us today.
Hi, Sushi. Morning.
So your team of economists just published the half-yearly monetary and financial stability report today. We have the complex geopolitics, the AI investment boom, the uneven growth in the U.S., as well as the Federal Reserve in transition. What are the key dynamics that you are watching most closely this year?
Let's first give a quick overview during the period under review, the major theme for the global economic dynamics. So we emphasize three keywords. First is uncertainty. During the period under review, the global economy facing rising uncertainty, both coming from trade and geopolitical fronts. Second keyword, resilience. The global economy still performed very resilient, including Hong Kong. The third one is K-shaped. So we observe K-shape almost everywhere. In the U.S., the divergence between high-income and the low-income households, the divergence between the tech and the non-tech capital expenditure, and also in this region, we observe the divergence in exports between tech and non-tech sectors. Looking ahead, the economic outlook for 2026 remains cautiously optimistic. The U.S. economy and global economy are expected to continue benefit from structural tailwinds. For example, the policy support in the U.S. will continue to benefit from the tax cuts, the expected rate cuts, and also the extensive deregulation. On the cautious side, risk persists. For example, the continuous the trade policy uncertainty. After the U.S. Supreme Court ruled against the IEEPA tariff, the U.S. government immediately imposed new tariff instruments. Also, risk coming from the geopolitical side. For example, the recent Middle East conflict and the impact on the economy and also on the financial market is still unfolding. We also concerned about the AI sectors. And also, finally, the challenge faced by the major advanced economy in terms of sustainability of their fiscal condition.
So Haibin, you mentioned AI as both a risk and a driving force. AI is also the hot topic in the market these days. Could you please elaborate a bit on that front?
So AI has been a source of the strength from many sides, including the CapEx, global trade, and also financial markets, helping the lifting the global economy in 2025. But it also has triggered concern, both in terms of sustainability of the CapEx activity for AI sectors, and also regarding the evaluation in the AI-related companies. The tech companies are relying much more on the debt financing instead of relying on cash flows. So in some cases, even circular financing. And if the expected return from the AI investment does not materialize or fail to materialize, then the question is that the tech companies were facing financial difficulties. And these difficulties may spread over across the financial sector, for example, through the bond markets or through the private credit markets or through the cross-border linkage between private credit and also prime brokerage and other financial institutions. And these are the risk areas we need to pay close attention.
Let's shift the focus a little bit back to Hong Kong. Hong Kong economy actually showed resilience in 2025. We see the exports held up and the equity market also boosted by the AI development. So could you please walk us through 2025 for Hong Kong economy?
Yeah, the Hong Kong economy recorded very solid growth in the second half of 2025. For the full year, 3.5% is a notable acceleration compared to 2.6% in 2024. So everything is good. And the good performance is because both actually the recovery in the domestic demand and also the very solid performance in the exports. So let's start first looking at the external front. Good exports increased significantly during the period under review, mainly because of the strong tech-related demands. Also, exports and services were supported by the very active, the strong activity in the cross-border financial market activity. We also see actually the inbound tourism is coming back during the period under review. Domestically, consumer confidence recovered, so that supported private consumption, and also housing markets continue to recover. We see that housing transaction and home prices both are increased.
So it's a good year indeed. So among all the external uncertainties and factors you just mentioned in your last answer, how do you assess the outlook for Hong Kong economy this year?
So looking ahead, we expect Hong Kong economy will continue to expand moderately in 2026. Again, still focusing on the exports, we believe merchandise exports we expect it to remain strong due to the sustainable demand from high-tech products during this AI boom. And also, it will benefit from the U.S.-China trade truce as well as a diversified trade structure for Hong Kong economy. And inbound tourists will continue to recover, driven by the hosting of the mega events and Hong Kong government's initiative to revitalize the tourist sectors. On the domestic demand side, we also expect it will continue to pick up in 2026. In particular, private investment will benefit from the improving the business sentiment and also easing financial condition. Particularly, our base case is that U.S. Federal Reserve Bank will continue to cut rates in 2026. Of course, actually, the pace of the rate cut is still uncertain, given the incoming transition of the U.S. Federal Reserve leadership and also the uncertainty in the U.S. inflation and economic outlook. On the cautious side, uncertainty will also arise from the evolving global trade and the geopolitical tensions, the sustainability of the AI boom, while commercial real estate remain under pressure for the domestic front.
So let's take a closer look at the banking industry, which remained very strong and resilient last year. And what's your outlook for this year?
Yeah, the Hong Kong banking sector remain liquid and well capitalized. Although in the second half of 2025, we see a classified loan ratio edge up, mainly because of the commercial real estate loans. But overall, the asset quality remain manageable, and the banking sector has a sufficient loan provision buffers. So we believe that the Hong Kong banks will continue to stay liquid and well capitalized, although they need to stay vigilant in assessing the impact of the various risk factors on the asset quality of their loan portfolios.
So we talk about the Hong Kong economy, including the exports, and we also talk about the trade uncertainties. Small and medium-sized enterprises is actually playing a very, very vital role in Hong Kong economy. It make up over 98% of all the enterprises in Hong Kong. Which many of them are actually facing the trade uncertainties these days. We know that the HKMA has launched a project to utilizing a platform called Commercial Data Interchange, or CDI. How is this platform performing so far? How effective is it?
It's very important that the HKMA and the banking sector have continued to support the SME sectors, particularly to help them to cope in the changing business environment. So in the financial area, actually, the measures include the bank loan support through the task force on SME lending, the SME loan financing guarantee scheme, fee waiver, and also the digital transformation. So you mentioned the CDI, the commercial data interchange. These actually help to address one of the key barriers for SME to obtain bank credits because actually the lack of sufficient and timely financial data. So to address this, actually CDI was introduced in October 2022 as part of the FinTech 2025 initiative. Our research demonstrates actually that CDI helped to address the information asymmetry in the banking credit markets. So by improving banks' access to consented data for SMEs, they enable banks to offer more favorable loan terms to SMEs. In particular, our study shows that compared between the the CDI banks versus other do not using CDI banks. Actually, CDI banks, on average, they charge much lower lending rate by 36 basis points. That's about 6% of average lending rates. Meanwhile, it also helped to reduce the collateral requirements by 1.1 units. That's about 22% of average unit of collateral requirements. So overall, we believe that economic benefit is significant for SME.
So that's quantified and concrete outcomes from this platform.
Yes.
Which was launched 2022,
Yes.
a few years ago.
Yeah.
So in your previous answer, you mentioned that Hong Kong saw a strong equity market last year. Actually, the bond market is also very active with strong issuance and including the landmark third digital green bond issuance. So do you see this momentum continue this year?
Yeah, so let's first start from the equity market, because 2025 Hong Kong equity market posted the best performance in the last 8 years. And also, Hong Kong reclaimed the global number one in terms of IPO in 2025. So local markets, the performance was supported by advancement in AI-related technology, particularly from the Chinese mainland companies, easing financing condition, and also sustained capital flows. So moving to 2026, the global uncertainty will continue to add volatility to the equity markets. For example, the latest conflicts in the Middle East has led to heightened volatility in the global equity market, including Hong Kong. To weather through these uncertainties, Hong Kong's sound financial system, free flow of information, stable exchange rate under the linked exchange rate system, and well-regulated market rules will provide very strong buffers. And moving to the debt markets, local debt market expanded with several key policy initiatives. And if you look at the Hong Kong dollar denominated debt issuance, it increased 16.6% in 2025, primarily driven by the issuers outside Hong Kong. During the review period, several milestone bond issuance took place, such as the third digital green bonds, offering of the 10 billion Hong Kong dollar, and also HKMC's issuance of multi-currency benchmark bonds worth 25.3 billion Hong Kong dollar in November last year. In the same time, the Hong Kong government, HKMA and SFC, issued the Hong Kong roadmap for fixed income currency market developments. So all these actually has been supportive to the development in the local bond markets. These efforts has helped to solidify the Hong Kong status as the global leaders in the sustainable financing, Asia's leading international bond issuance, and also the premier offshore renminbi business center. Looking ahead, the strong momentum in Hong Kong dollar debt security issuance is expected to continue in the near term, although the sustainability will depend on the Hong Kong dollar fund flows. In the longer term, the improved market depths could boost demand from both issuers and investors.
So let's zoom out a bit to the Chinese mainland, to which Hong Kong is very closely connected to. So the two sessions actually just concluded, which set out policy priorities for this year. And it is also the first year of the 15th five-year plan. So among all the trade geopolitical uncertainties, how do you assess China's economic growth this year?
Yeah, China's economic growth moderated a little bit in the second half last year, but still the full-year economic growth achieved the 5% growth targets. And I should also mention that two bright spots for the mainland Chinese economy in 2025. First is a strong export performance, and the merchandise trade surplus hit a new record high at around $1.2 trillion despite the return of the trade war. The second is the technology innovation, particularly in the AI areas. So these help offset mitigating the drag coming from the housing market correction and weak, relative soft domestic demand. 2026 marks the first year of the 15th five-year plan, which emphasized the development of modern industry system, technology self-reliance, and the new quality productive forces. The government also talk about expansion of the domestic demand, particularly consumption. So all these are important to keep in mind to think about the policy. The government has lowered the annual growth target this year from 5% in 2025 to 4.5% to 5% for this year, meaning that they recognize the headwinds on the external front and also the domestic structural challenges. But overall, we believe that the economic side, actually, the key words is a continuation to understand China's economic outlook. On the policy side, both fiscal and the monetary policy continue to be growth-friendly in this year. And also on the economic structure, we believe that the government will try to push for structural transformation. But however, the divergence between supply and demand, between external demand and the domestic demand, and also divergence between our performance in the new economy sectors and underperformance in other sectors, these also will continue.
So we almost come to an end of this episode, but before we wrap up, I want to ask you a few quick-fire questions. You ready?
Go ahead.
Name one risk that is underestimated by the market right now.
Geopolitical uncertainty and its impact. I think this is a topic actually the market has extensively discussed. There seems some complacency regarding the impact. So I think this is probably the one area that underestimated.
One unintended consequence of AI beyond inflation or job displacement?
Yeah, good question. A lot of discussion on the AI impact on the labor market, but I think that what is under discussed regarding AI impact is the impact on global inequality. Because we notice actually the AI developments is the gap is very large between the leading and the following countries. So which means that for the poor countries actually the opportunity to catch up will probably be further compromised with the incoming in the AI area, and that may actually further increase the global inequality.
Okay, so the third one. So one lesson from past financial crisis that you would like to stress today?
Yeah, if you look at the history of the financial crisis, usually come from unregulated or underregulated areas. So from that perspective, I would say sound financial regulation and supervision is still essential, particularly given the financial activity has become much more complex these days. Equal treatment, equal regulation is very important.
Okay, final question. Name one structural trend that gives you confidence in Hong Kong's long-term outlook.
Yeah, I think we should feel confident about the Hong Kong's future. Particularly, we talk about transition of the Hong Kong's law from the super connector to a super value adder. In the past, actually, Hong Kong, the super connector role mainly to bridge between mainland China and the rest of the world. Now, super value adder is also about Hong Kong itself to develop the new sector, for example, Finance Plus and AI Plus, and to strengthen Hong Kong as an international financial center and the professional service, and also to promote Hong Kong's in the AI and other technology innovation key sectors.
So that's a long sentence, which means so super connector and super value adder, a lot of things to keep us hopeful.
Yes.
Thank you, Hai Bin Ho, all the great insights.
Thank you, Sushi.
And to our audience, you can visit the HKMA's official website for the full half-yearly report and more economic research. Thank you again for watching HKMA podcast. Until next time.